Hello traders, this is Blake Morrow with Forex Analytics, and you're listening to the week ahead video for October 1st, 2023. First things first, go Team USA. Now, I know it's Saturday in the Ryder Cup and it's late in the day. Well, it is here right now. Fact is, we're probably not going to win, but go Team USA. Got to have faith, right? All right. But what I really wanted to talk about before we get into the markets and we talk about the government shutdowns and how it's affecting the markets, going back and taking a look at the VIX, thinking about all the headlines that are going to be coming out over the next 24 hours. I say 24 hours because it is Saturday here. I'm filming for Saturday, so you're going to be watching this on Sunday. But between now and then, the U.S. government's probably going to go into a shutdown. And how's it going to affect the markets when we reopen? We're going to talk about all of that and how it's going to affect economic data and whatnot. But before I do that, I need to mention, we very rarely, most of you know this, especially for those of you that have been listening for years and years and years to the week ahead video that I film here, we very rarely have pricing discounts for the Forex Analytics platform. Right now, and probably for the next week and a half, we have discounted our rates, and you get to take advantage of it only a couple of times a year, sometimes only once a year. This is your opportunity. We have a buy 1 month, get 1 month free for Forex Analytics. You also have a semi-annual and annual discounts that you can take advantage of. We have people that literally wait around for this time of the year to take advantage of our discounts. So make sure you do so, because once it's gone, and then we won't put it back up probably until the beginning of 2024 at some point. So anyway, just wanted to make sure that I mentioned that. Take advantage of it because, like I said, it doesn't come around that often. Let's talk a little bit about the markets and how this could affect not only currencies but equities. This whole shutdown. If you look at the S&P, a couple things I want to just make mention of here. Yes, we completed an A, B, C, D, equal leg move here. You can see it's pretty clear, right? Equal leg move is basically done. We're about 8% off of these trend highs that you see here, right? Now, the reason why I mention that is because we are going to go into a shutdown. There's maybe 99% possibility, between, and I'm speaking ahead of of Saturday night, even though you're probably watching this afterwards. You're gonna see a ton of headlines, right? Question is, how is it gonna affect the market? Well, I don't think it's gonna have a huge effect on the market right now because we're already seeing the market price that in. What you have to look out for is when there is a remedy, and the U.S. government will open at some point in probably the next couple of weeks, if not sooner than that. We're going to get a recovery rally in equities. Think about, we're already 8% off the highs here, and we've sold off maybe 6% over the last 3 weeks or so. So yeah, there will be a recovery rally at some point. Always keep that in mind. Now, how's it going to affect the other markets? Well, first of all, if you look at the 30-year, this is the 30-year bond market. I drew this out. I sent this out via Twitter the other day, and if you follow me via Twitter, you've seen this. But I wanted to pull this chart out and just show you where we're currently at. Right, you can see where we're currently at and how big this level is. Going all the way back into 2001. You can see what a pivotal level this is on the 30-year. Now, obviously, confidence in the bond market has been shaken. Right. But at some point, people are going to start looking at the bond market as a value proposition, because I can, as silly as it sounds, with the U.S. government going, shutting down, people will still buy U.S. treasuries and bonds and, fixed income because of the overall safety, maybe versus anything else. But you're going to see that in gilts, and you're going to see that in boons, and you're going to see it also because this is a global issue, not just a U.S. issue. But you're going to start to see value players coming in, and when that happens, you have to imagine what happens to the dollar. So if you start to see bonds rally as a safe haven asset, which historically they tend to be, then you might get a bond market rally. Yields come down. That means the dollar is going to sell off. However, and I want to say this really clearly, not all dollars are going to respond the same. and this is where you have to be really, really selective on what currencies you're trading. If we see a bond market bounce and a dollar sell-off, because the dollar is more than likely going to sell off against some European currencies like the euro, maybe the sterling, but the dollar might actually hold its own and look a little stronger against growth commodity type of currencies or emerging market currencies. The reason why I say that is because the dollar, you can't treat the dollar the same across the board in a risk off, scenario where bonds rally, stocks come down, and the dollar, will find its footing against certain currencies. That's why you have to be really selective in that type of situation. Would we see a broad-based, dollar sell-off if the bond market rallied and loss of confidence in the dollar? Maybe, but I think you have to be still. There's going to be better choices, and we're gonna find those for you here in just a few minutes. Hey, I also have to mention this: we are going into a U.S. government shutdown, more than likely. Obviously, by the time you're watching this, you're going to say, "Yeah, we already shut down." A lot of services are going to be affected, and I need to mention that because this week is a non-farm payroll non-farm. It's still Saturday for me, guys. It's a non-farm payroll week this week. We might not get that data from the BLS. What does that mean? And how what does that mean for us as traders? It means we're going to be flying blind a little bit against certain economic data. We're not going to be able to see CPI data if the shutdown continues and it's elongated. That means we're going to have to focus more on private data, like the ADP data, looking at the ISM data and really parsing apart the details, the fine details, looking at JOLTS data. So there's a lot of things that will still take place, but you have to imagine that focus will be more accentuated maybe on Wednesday's ADP data, since the U.S. government is shut down. If everybody thinks, well, we're not going to get the NFP on Friday, that means on Wednesday, that ADP data is going to be extra important. Guess what? Well, the Forex analytics team, we have you covered because we cover it live. And if you don't know that, we're covering economic data live every day, check out the Face Show. This one right here, you're gonna see myself and the rest of the Forex analytics team talking about economic data and going through it and looking at the charts and finding those opportunities live when it happens. Also, if you're up in the European hours, take a look at make sure you're watching K-Man and Ryan Littlestone on the Flow Show. These guys are going to get you prepared for the trading session if you're in Europe. And if you're in Europe, go Team USA. Just kidding. Joking. Hopefully I got a laugh from you. Okay, let's get into the charts and let's get into everything that's happening this week. I'm going to pull myself off of so you don't have to see me. I'm going to pull myself off. There we go. And let's get into the actual data that's coming out and look through the markets. Now, I want to revisit something really quick before we go into some of these individual currencies and individual markets or indices and whatnot. I want to talk a little bit about something we were mentioning last week. We were talking about copper and VIX. Here's the volatility, and I want to show you the volatility failed, on this rally. Take a look here. We got above the 200-day moving average. We tried to break out, but we couldn't sustain. Why is that important? Well, that's important because volatility is failing, keeping risk supported. But if you start to see the VIX rally above 20, then you have to know that at that point in time, if we do get above 20, it's going to be some risk aversion. And so just be watching volatility this week. I think it's going to be really important to see how the market's gauging the U.S. government shutdown, and is the market getting more concerned? Because if the market is, you're going to see that volatility perk back up again. The other thing that we talked about last week, really quick, is we talked about copper. And take a look at copper. We had a false breakout to the upside a few earlier this summer, right? Then we had a little false breakout to the downside. So, I think since the market's, tricked both sides at this point, you just got to look at more of a range. But if the range starts breaking, either these highs or these lows, that's when things are going to get real in the markets, in my opinion. So still keep an eye on copper. I mean, you can see we're obviously, struggling at the 50 DMA. That's the orange moving average right here. So, while we're below the 50 DMA, the risks still are slanted to the downside at this point. All right, now let's talk about what is happening on the economic calendar and how it's going to affect individual currencies. So over the weekend, not only are we going to get a U.S. government shutdown, more than likely, we will get China PMIs, and those are slated for release for tonight. And I know, like I mentioned to you, you're probably watching this on Sunday, but I'm filming on Saturday morning. So, later on today or over the weekend, we're going to get Chinese PMIs, and that is going to be a little bit of a driver since next week China is on Golden Week. So it's a Chinese bank holiday. It's a national holiday. So this economic data might affect the open alongside the government shutdown come Sunday, when the FX markets and futures start reopening there as well. So just keep that in mind over the weekend. So on Monday, what's gonna be moving the markets at first? It's going to be the US ISM. Now, the ISM, I just want to mention, it is the ISM data is this is the manufacturing data. The services data, which is going to come out on Wednesday, is going to be, in my opinion, more important. But notice that the dollar's kind of stuck here. And here's your breakout point. And we held, and actually, because of end of month, end of quarter flows on Friday, the dollar actually regained its composure. So we closed in breakout territory for the dollar, right? We are still in breakout territory. Why is that important to us now? Because if we do break these lows from Friday, that to me suggests we're probably going a lot lower. When I say a lot lower, I'm talking maybe about the 200-day moving average. I think if we take out Friday's lows, we will start to see a much broader US dollar pullback. First obstacle would be getting back below the here. Let me just draw it out for you. Getting back below the channel support, and then below that it would take us probably back towards the previous channel, which is in red. You can see this one right here, right? So we'll probably come back and retest that channel support next. So I just want to say that again. Watch the dollar, because if we do break below Friday's lows, that is probably going to be near-term bearish for the dollar. Do I think the dollar is going to get wrecked? No. I actually think the dollar is going to be bought on pullbacks. However, that doesn't mean that we can't have a string of a couple of weeks of the dollar getting hit, especially after we've had 9 weeks. Wait, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 weeks of a rally in the dollar. Yeah, if we get a pullback, it's going to be a pullback that's probably going to be bought. So that's something that we need to keep in mind. Okay, so we have, and that would probably coincide with some weaker data, right? We have ISM manufacturing data coming out on Monday. Tuesday, or I should say Monday night, if you live in North America or South America, somewhere on my side of the world, but Tuesday morning, we have the RBA decision. So we have Australia is going to have their interest rate decision. Now, the market is not expecting anything from the RBA this month, nor the RBNZ, which we'll talk about here in a second. But one thing that we have to keep in mind, at this point, the Aussie, and I'm going to redraw this a little bit. I'm going to show you guys some specifics. If you were not in the Forex analytics community, you may not have seen this, or if you were not listening to the week or the daily shows on Face, you might have not seen this. So I'm going to show it to you now. We have this descending channel. Now, keep in mind, we are also, holding this long-term support, very similar to copper, right? This chart and copper, you can almost, put right on top of each other. I'm not going to do that for you right now because we've got too much to talk about. What you might not have seen here, and especially those of you that were chasing the Aussie lower, trying to trade a breakdown in the Aussie, on our face shows and on our daily shows, we warned you guys that we were at 127% extension. Let me just show you right here. And you didn't want to get short into that 127% extension, and we had divergent relative strength, and so we got this snapback rally. Now, you can see the Aussie is very well contained. That probably is not going to last. Now, you're probably going to have to see a broader recovery in risk to see the Aussie really gain any type of steam. But break above 65 is going to take us back to 66 cents, which is right here. If we start breaking below 63.50, then that starts opening a lot of downside. And look, I don't have any Aussie exposure right now. I was short. I covered it. Just kind of playing inside of these ranges, but I'm looking for an eventual move in the Aussie. I don't think the RBA rate decision this week is going to be the market mover. I just don't think. I think we're going to be looking at broader risk. What's happening with the stock market to get a better sense of what we should be doing with the Aussie. Between that and maybe the Chinese data rolls it over, but I don't know. We're gonna have to just watch it carefully. You can see it's very range bound. I think the market's trying to figure out which way it wants to trade it as well. All right, so moving along. One of the other things that's happening Tuesday morning now in Europe is going to be Switzerland's CPI data. Now, the Swissy has had a really, really great recovery. I was playing the Euro Swiss to the long side. Once we broke out of this channel, we've talked a lot about it actually on our shows. I just haven't mentioned it here on the week ahead video, but something that we've been discussing quite a bit. The Swiss CPI still should come in below 2%, and that should keep the downside pressure on the Swiss. However, one of the risks right now is if the government gets into a prolonged shutdown, you might see the Swiss currency become a safe haven currency. And notice that we had this move right here and a false breakout above 91.50. Now, this was my chart of the day. I believe, if I'm not mistaken, we can go find it. If you go to blog, I think it was my chart of the day on, Thursday. So you can see it right here, right? I was warning everybody a little bit of a false breakout. So, we did get that false breakout. Now the question is, if that Swiss inflation is a little stronger, as we are seeing inflation data globally is starting to, stabilize, we could see the Swiss franc really gain some steam if the government shutdown, persists. If you get some risk aversion, might get people or traders, selling dollars, buying Swiss francs. So watch the dollar Swiss. I think it's going to be a really, really interesting, currency over the course of the next couple of weeks, especially with inflation data coming out. Now on Tuesday, we also have U.S. JOLTS numbers that'll be released. Tuesday night or Wednesday morning, we have the RBNZ. And like the RBA, no one expects the RBNZ to move either. But what we're going to be looking for is we're going to be looking for some guidance because New Zealand's GDP data was rather hot. So people are going to start watching language because most, I was just talking to Michael Brown from Trader X. We were just talking this week, and he had mentioned that that because the RBNZ was one of the first to raise rates, they may be one of the first to start suggesting that they're ready to cut rates. However, like I said, GDP data was pretty strong. So with that being said, we have to be really careful with the Kiwi. And I think it's going to be a little bit of a mover because you can see we were in this triangle consolidation. We broke out of the triangle. For those of you that did not see this, again, these are things that we talk about inside of the Forex analytics community. We completed the minimum expectation of this triangle breakout. I'll show you. It looks like this. It was the minimum expectations we got, and it hit that resistance and then reversed. So we're going to have to watch it really carefully because if we get a foothold above, let me just draw this out. If we get a foothold above that 60-50 level, you're going to see a bigger and much broader recovery back towards the 200 DMA. Now, a failure here, obviously, people are going to start looking at it as more of a bear flag type of pattern. If we get a failure up here, Traders will start looking at it more long term, something that looks like this. So in my opinion, there's going to be several ways to look at the Kiwi, and I think a lot of that's going to come on the heels of the RBNZ and what we hear from the RBNZ and what their stance is, because that's going to allow for the market to get more of a bearish stance or get more of a bullish stance. And remember, we got to be tilted more towards a bearish stance right now because the U.S. government is in a shutdown. You're going to have traders naturally selling commodity type of currencies like the Kiwi, like the Aussie, from a risk aversion point of view. So just keep that in mind. Okay. Moving right along, on Wednesday, now we're out of the RBNZ, but on Wednesday, since we are looking at a government shutdown and no non-farm payroll data on Friday, if this persists, focus will be shifted to the ADP data on Wednesday and also the ISM services data. Just a little bit later. Now take a look at the euro dollar. I think the euro dollar tells you everything you need to know. The breakdown point right here was the previous 38% retracement. We talked about it last week. Once you broke it, you got a nice sell-off, and you can see how really I should say this, and I'm gonna say this, just as easy as I can, or as clearly as I can. Technically, the euro is doing exactly what it should do. I mean, we got the breakdown below the 38% retracement. We talked about that last week on the week ahead video. You saw pretty good sell off, right? I was short the euro, so it was a nice little move. All right, we got a recovery, and that recovery took us right to the breakdown point and reversed on Friday. So technically, the euro is doing exactly what it needs to do. So what does that mean? Well, it's pretty simple. That is what you should consider your bull bear line in the market. While the euro is below 106.30, you have to start, you have to think of it as more of a bearish trend. If it gets back above 106.30, we're probably going to see a little bit bigger recovery, maybe back up towards the 50 DMA. If this happens, we might make a little bit of a move here. And remember, this is the 50 DMA and the 200 DMA are actually crossing, so they come in right around the same spot. But that's your level. It's all about that level, and that makes it pretty simple, right? And let me just say this: if you all are appreciating the week ahead videos and what we do here as a team, make sure you give our team a big thumbs up. You subscribe to this channel. If there's something that I missed, something that I should have talked about, maybe I overlooked it, please jump in the comments section down below. Let everybody, myself included, know, hey, Blake, you forgot this, you forgot that, because I don't catch everything. And it is Saturday morning here. It's my weekend too. So big thumbs up would be much appreciated, and definitely subscribe to the channel. Okay, getting back to the analysis. So the euro, we know where the key level's at, right? That's it. Especially with that data coming out. On Thursday, we have unemployment claims. Do we? Are unemployment claims going to be released? That one, I'm not 100% sure. I have to do a little bit more digging and research. So maybe one of you really smart cookies that are listening into the show right now could let us know, are we going to get unemployment claims on Thursday if the U.S. government is still shut down? Friday, NFP, maybe not, depending on the shutdown, but we are going to get Canadian employment data, right? Now let's take a look at the dollar CAD really quick, because this has been a tricky market in my opinion. The reason why it's a tricky market is because the Canadian, it's not only influenced by what's happening with the dollar, but it's also influenced with what's happening in crude oil. Now, here's the problem with crude. Most of you all know this. If you listen to me daily, we had a bull flag pattern. We basically completed it. We got really close. As I like to say all the time on our shows, close works. With hand grenades, close works. Close works when you play horseshoes, and close also works technical analysis pattern completions. You get close, that's close enough. That worked, right? So we completed the bull flag pattern, or the bullish pennant that you see here in crude. Crude now looks like it might fail because it's got a false breakout. You can see it right through here. right? Whoops. There you go. So you got this like little false breakout right here. Now we might see a little bit bigger move in lower in crude oil. I was talking to Jim Welsh yesterday from Macro Tides, and he's like, well, it's going to make sense for crude to come down because A, everybody's bullish. B, economic data might start to weaken globally. And so if that's happening, and you could actually see crude go from the mid 90s back to the mid 80s and maybe even lower as it gets, and it makes all the now who's all bullish crude at this point, everybody's bullish crude right now. You got to prove them wrong, right? The market's going to prove all of those strategists and economists wrong and go down from here. So I think technically it's showing the risk of a move lower in crude. Now, what does that mean for us trading the US dollar Canadian? Well, it means that dollar Canadian might be free to move a little higher, especially if the dollar starts to get some good economic data. And at the end of the week, if the Canadian jobs report comes in below expectations, maybe that's another reason the dollar Canadian could make a move towards 137, which would be channel resistance. So that's something we should all be paying attention to come Friday. Now, I do want to go over some other markets that are very, very important. We talked about the bond market. We talked about where yields are at, or not where yields at, but we talked about where the 10-year was or the 30-year was. But look at the 10-year yields, right? This is a risk that we hit the 127% extension. If yields start to come down like this, and the bond market catches its footing, then we might see the dollar. And let me say this once again. Not all dollars will be treated equal in this situation. If you start to see the dollar sell off, it may not be a broad market dollar sell off. It might just be the dollar loses ground against maybe the yen, maybe loses ground against the euro or the sterling, but maybe holds its own against the Aussie or the Kiwi. That's the way the dollar tends to react in a risk off or a type of environment. So just keep that in mind if yields start to pull back. Okay, so we want to talk a little bit about yields. I want to talk a little bit about gold, and we should actually look at gold. Gold is at the 50% retracement. Now, I had been anticipating a move lower in gold, but I thought gold would bounce here. Now, that's not to say that gold, like all is lost for gold, but I will say this: that is not a bullish close in gold. It's not. But there was a lot of end of month, end of week data. So I think you're going to have to watch this 50% retracement that we happen to be on right here, which is 1850. Because if we get much below 1850, the next stop in gold would be the 618 Fibonacci retracement, which comes in below 1800. So just, be focused on gold as well. We should take a look at the German DAX, because the DAX looks a little vulnerable here. Because we've sold off, can't hit the 161% extension. As you all know, we talk about this every week, right? We hit it, now we bounce back, but look at the rejection. Previous support right here, right? Previous support acted as resistance. That's a gravestone doji on Friday. So the risk is that because of that failure, we should see some downside pressure in the German DAX. The Nikkei. Now, the Nikkei still is holding up. Here's going to be the risk. I know we talk about this every week as well. If we start getting below the 31,000 level, that's when it starts getting all the longer term Nikkei bulls out there. That's when it gets them a little wrong-footed. Do I think that Japan's going to outperform other markets? Yeah, I think once we, look at the markets and go, okay, we got the all clear, maybe we should start looking at being long risk, because the bottom looks like it's stabilizing here in the S&P or whatever else. Probably the Nikkei is going to be the market where you're going to want to be, because it's going to be outperforming more than likely. Just remember, the BOJ still has a very, 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 very easy policy going on in Japan, and that's why you can see it's outperforming, right? Okay, continuing on. Let's take a good look at the S&P. So the S&P, channel support, 200-day moving average. We finally hit channel support this week. 200-day moving average just below that. That means that 4,200 is very critical, because, let's get rid of this. Let me just make sure you all see it, because if you don't follow me on Twitter, or you missed one of my tweets, then you missed the, five-tuple Yeah. So confluence here. Channel support, 200-day moving average, 38% retracement. 161% extension here. You can say, triangle minimum expectations of the triangle breakdown was met. Then we have an AB equals CD move. Yeah, you got that too. Like A, B, C, D equal leg move there. Yep. You see all that confluence? No wonder the stock market bounced. But what makes that even more dangerous now is if that low is broken, I think we go lower than the 200-day moving average. I think the 200-day moving average is going to be sliced through like butter should we really break down. So keep an eye on these lows. Now, again, government reopens within a couple of days. We're probably going to get a little bit broader rally towards the 50 DMA, which takes us all the way back up towards 4470, something like that. By the time we reach the 50 DMA, it's descending at the same time. Maybe it becomes more like 4450. Who knows? But again, it all hinges on the U.S. government more than likely, and nothing else. All right. Continuing on. We've looked at the NASDAQ. You can see the NASDAQ's a little vulnerable here. We're basically at the neckline. And Russell 2000, we hit the 78% retracement. You could say we hit, trend line support. That trend line's probably been redrawn now to look something like that on most traders' desks at this point. Doesn't mean we're not bearish and we can't complete this move in the head and shoulder pattern, but you are seeing a recovery, which you look at the 200-day moving average right here. It's going to come right in around the neckline. That's probably a great place to be on the short side of the Russell 2000 if you're following that market. Looking at the Dow also. Let's change this. We came out of obviously the ascending wedge. Let's take a real quick look. 50% retracement held there, but this is going to be the 38% retracement, which is going to be the more important level, in my opinion, in the weeks ahead, which is going to be around 33,000 or so. Now, I also want to, mention this again, really quick. Guys, gals, if you want to take advantage of all these types of moves, make sure you check out the trader funding program, because this way you can access larger trading accounts and not be risking your own money, especially when there's a lot of volatility. If you want to learn more about it, just you can click down on the link down below this video if you're watching on YouTube, or you can just go to our website and go to the trader funding program that way, or you just go to trader funding program, learn about it, see how you can access larger amounts of capital and not be risking your own capital. Okay. I'll let you go ahead and research that yourself. Now, with all that being said, I want to say next week could be extremely volatile. It's Golden Week in Asia, right? We have the Ryder Cup. I'm joking, totally joking about that. It will be over, thankfully. But we actually have next week a government shutdown more than likely, and the markets are going to be very edgy as a result. So a lot of headlines and could create some volatility next week. And I want to thank you so much for spending your time with me, because I know it's super valuable to you over the weekend. So thanks for taking the time and watching this video. And if you enjoyed it, please give us a thumbs up. So my name is Blake. I will see you Monday morning on the Face Show. Have a great remainder of your weekend. Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.